Alright, ladies and gentlemen, today is Friday, tomorrow is Saturday. That means this is the last day of trading this week for the stock market. And AMC is well outperforming the stock market. AMC is up 3.5% today. The S&P is down 1%. This is a very welcoming sign heading into the weekend and heading into more earnings, which are going to take place next week. So we're going to take a look at AMC on a technical basis. We're going to look at the Ortex data. We're going to look at the Stonko tracker data, the FTDs for today as well as next week. And it finally looks like maybe some of them are being covered on. Let's get into all of this information. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So let's get into it. Like I said, AMC is up about 3.5%. S&P 500 currently down 0.74%. So this is flying in the face of the argument that AMC has to go down with the broad markets. That's typically what we have seen in 2022, but it's not happening today. And it could partially be due to the FTDs that have been running rampant and the fact that AMC is still on the threshold securities list. So if we go ahead and take a look at the Ortex data, this is usually where we like to start because it gives us a lot of information right away. So click on the live short interest. Live short interest of free float at 23.42%. These are levels that we have not been at since one reading June 1st of 2021. So you have not been here in like almost 2 years, right? Approaching 2 years now. So for that matter, that makes me very bullish, right? And that does lead me to believe there's a big possibility of a short squeeze. Obviously 23.5% short interest, a high for almost 2 years now. Should be pretty exciting, especially to see AMC performing so much better than the markets on a day like today. We have 121 million shares that are currently sold short with a cost to borrow average of 527.22%. Cost to borrow max 955.66% and cost to borrow minimum of 7.6%. We still don't have an update from Interactive Brokers, but I would imagine if the cost to borrow max is 955% today, the Interactive Brokers is probably like 300 to 400. That's kind of what we seen last time. The cost to borrow rate was in between 900 and 1,000%. And last time we seen that, it did give us a pretty big rally to the upside as well. And then the cost to borrow rates went down and now they're back up again. So that is very exciting. If we take a look at the option activity for the day, still, positive order value of 1%. 53 orders totaling $10.32 million. 1% positive order value. And I think the positive order value has been so low as of recently, and the short interest pretty much climbing on a consistent basis, is there is a lot of short positions out there, and a lot of these, institutions, these market makers, hedge funds, they are keeping their short positions on, right? They're keeping their short positions on AMC, but they're going out and they're buying these puts that are deep in the money. And when they do that, they can actually report to FINRA and the other, agencies, the DTCC, that they have actually covered on those positions. In all reality, they have not. So I think the short interest is likely much higher. Now, if you take a look at the Stonko tracker data, you'll see specifically for March 17th, you have 950,000 puts that are out of the money. I think a lot of that, like I said, has to do with hiding short positions and potentially up to, 10 million shares, 100 million shares that potentially are being hidden in the option activity. So I do think come down to March 17th, you're going to see some very aggressive moves, especially if AMC does not fall through the floor like a lot of people are expecting. Now, for this week, you have about 142,000 calls that did expire out of the money, 32,000 puts that expired in the money, and about 339,000 puts that expired out of the money as well. For next week, almost 15,000 calls that are in the money 81,000 calls that are out of the money, and you do have puts in the money at about 11,000, puts out of the money at about 61,000, and then, like I said, it's pretty docile couple of weeks, and then you get to March 17th, where you have a lot of option activity. So there is that. Now, nothing really happened on the day, and I want to point this out. We did have one Fed speaker, Fed Harker, that came out today and said that 25 basis points would be essentially what they're going to vote for, unless obviously CPI came in hot again, or the data changed, the information changed, and that didn't do much compared to Fed Bullard and Fed Mester yesterday that said they would have done a 50 basis point rate hike at the last Fed meeting, and maybe a 50 basis point rate hike is needed at this upcoming meeting. And that's kind of dominating the headlines here, because the markets were not at all pricing in a 50 basis point rate hike at the next Fed meeting. We were just 2 weeks ago only expecting one more rate hike for 2023. Now you got people starting to price in a 50 basis point rate hike at the next meeting, and then a 25 basis point rate hike after that. So that is really what is fueling a lot of this fear in the broad markets here today. So there is all of that information. If we take a look at the FTDs, go ahead and refresh this page right here. You will see today is February 17th. You got about 2 million FTDs that need to be covered here today. It looks like that is actually happening. For Tuesday, you do have 2.5 million FTDs. For Wednesday, you have 1.8 million FTDs. For Thursday, 1.5 million FTDs. And then next Friday, 1.4 million FTDs. And then the following week after that, that's where things get a lot crazier as far as FTDs, where you have 2 million, 2 million, 3.2 million, 3 million, and another 3 million. And those are just every day, back to back to back, millions of FTDs that need to be bought back. So I do think that will help, to fuel some of this potential rally before and after earnings. Now, what I'm currently seeing as far as the technicals are concerned is very encouraging, especially after a day like today where the markets are pretty fearful, right? And AMC is not reacting in kind. You are now above this major squeeze level that I talked about for a long time now. This was the support level, and the level in which you broke above and really started to rally the last time around, and that is around $5.30 per share. You're not too far off of that. It's $5. We're at $5.44 as of right now, but you're showing some solid strength at this line. Now, if we hold above this, especially heading into next week and the week after that, well, that's going to be good. But even better than that, if you just break out above like 570 from right here next week, it'll be around 560, and that's this downtrending level of resistance, especially heading into earnings. That could make for a very exciting earnings season. Now, let's go ahead and pull up some of these technical indicators as well. The RSI is at 51.11, right? So pretty neutral. The MACD is pretty neutral as well on an overall basis, because you are right here at this middle level, but you are starting to go negative on the MACD, although you are seeing a little bit of a curling effect here today as well. So I do think the next week or two is going to be massive for AMC stock and could open the door for massive opportunity as well, guys. So there is that information. I do want to talk about kind of the videos that are going to be made this weekend, because I had some people yesterday say that the fundamentals don't matter, that I lost you guys on that, and then some people are like, yeah, I want to hear that video. I want to be clear. It's not that the fundamentals matter to a point of causing the squeeze, or that's not the biggest thing, but the only reason why people ever short a stock 99% of the time has to do with fundamentals. What happens between, that point to the point in which they cover? Well, if the fundamentals increase, it helps to squeeze them out of their positions, right? Doesn't have to, right? AMC doesn't have to see fundamentals getting better, but my point is they're not getting worse. They're getting better from here. They're not getting worse, and that is a big factor when it comes down to shorts deciding to cover on their short positions or not. So that is going to be all for this video. That's going to be a video that we're going to make over this weekend, as well as that I do want to really talk about earnings and what kind of effect that could have with AMC. Mix it with the FTDs, mix it with the short interest data looking so good. What could that do for AMC stock, and how do I plan to trade it? That's going to be another video as well coming out this weekend. Now, if you guys want access to all of my trades in real time, link down below in the description of this video. Nonetheless, you guys enjoy the rest of your weekends, and I will see you in the next one.